Ladies and gentlemen, good day and welcome to GMR Airports Infrastructure Limited conference call to discuss Q4 FY23 results. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us today Mr. Saurabh Chawla, Executive Director, Finance and Strategy. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Also, recording or transcribing of this call without prior permission of the management is strictly prohibited. I now hand the conference over to Mr. Saurabh Chawla for the opening remarks. Thank you and over to you, sir.
Thank you. Good evening, ladies and gentlemen. Thank you all for joining the fourth quarter fiscal 23 earnings call. The Indian economy still remains a bright spot in the global arena. Globally, the economies are facing challenges from geopolitical uncertainties, high interest rates, and banking issues. In India, the economic indicators are continuing to exhibit growth momentum. Monthly collections of GST, which is one indicator for April 23, was at an all-time high of INR 1.87 lakh crores. Inflation has receded, as indicated by the latest WPI and CPI numbers, at -0.92% and 4.7% respectively for the month of April 23. Forex reserves are slowly building up again, reaching to $596 billion in May 23 from $576 billion in January 22. We believe that India's medium to long-term growth prospects are healthy, and amidst the government's strong push for infrastructure spendings, the outlook is even healthier. Regarding our performance for Q4 fiscal 23, GMR Airports gross revenue increased by 48% YoY to INR 1895 crores in the fourth quarter, driven mainly by traffic improvements in our operational airports. EBITDA increased by 52% YoY to INR 259 crores. For the full year, EBITDA decreased by 18% YoY. The decline in Q4 23 and FY23 EBITDA is mainly due to the start of monthly annual fee payments at Delhi Airport from April 22. Additionally, Q4 23 and FY23 included certain one-offs related to loss on settlement of derivative instruments of INR 30 crores and INR 90 crores respectively, with respect to the partial repayment of bonds in Hyderabad Airport. Additionally, there were certain other one-time write-offs of around 63 crores at Hyderabad Airport during the quarter 4 and for the full year. I would like to highlight the following key points. During the quarter, we announced the execution of the agreement and the scheme of merger of CAL and GIL with an objective to enhance shareholder value by simplifying the corporate structure and bringing public shareholders closer to the airport assets. As part of the process, GIL and Group ADP will settle the cash earnouts to GIL at INR 550 crores and also the equity earnouts at 4% out of the total 8% that was to accrue to GIL. GIL raised euro 331 million, that is 2,900 odd crores approximately, from Group ADP through a 10-year 6.76% per annum coupon. SCCB is due in 2033. Immediately upon completion of the merger, GMR Group will remain the single largest shareholder of GIL, with GMR Promoter Group owning about 33.7%, Group ADP holding 32.3% and the public holding 34% respectively of the paid-up equity share capital. The entire merger process is expected to be completed within fiscal year 24. So far, CCI approval for the merger has been received. An application has been filed with the stock exchanges and Reserve Bank of India, and the process of evaluation and approval is awaited. Secondly, Mopa, which is the Goa airport, commenced commercial operations from January 5th, 23. Currently, Indigo, Akasa, SpiceJet, and Vistara are operational from the airport. Cumulative traffic at Mopa Airport has already crossed 1 million mark as on 1st May 23. For the month of April 23, the airport handled an average of approximately 11,000 passengers per day. International operations is expected to start from July of this current year. We expect the new tariff regime at Mopa to be in force by October 23. During the quarter, we received about 631 crores from NIF, a partnership that we have effected with respect to the Goa airport. This investment is in the form of CCDs. As you're aware, in December 22, GMR and NIF announced a financial partnership for NIF to invest in the equity capital of the 3 airport projects, which included Mopa in Goa, Bhogapuram, which is the Visakhapatnam airport, and Nagpur airport as and when Nagpur airport concession is signed. Overall, the passenger traffic for GMR airports, Q4 23 displayed a strong growth. Passenger traffic was up by 55% year-on-year to 25.8 million in Q4 fiscal 23, with Delhi and Hyderabad experiencing a surge in traffic. On a full year basis, passenger traffic of our operational airports was up by 69% year-on-year to 92.8 million in fiscal year 23. In India, our market share in passenger traffic is approximately 26.6% for fiscal year 23. With respect to progress on capacity expansion in our airports, Delhi, Hyderabad, and Crete, all the 3 airports achieved an 86%, 85%, and 20% respectively the completion as on March 31st, 23. As of April 30th, Delhi and Hyderabad airports achieved 88 and 86% of the capex progress. Delhi and Hyderabad airports are targeted for completion in Q2 FY24. We expect the new tariff regime at Delhi to be in force by April 24. On the airport land development in Delhi Airport, we have initiated our first self-development commercial building of about 6 lakh square feet in the Gateway District. In Mopa, Goa Airport, land monetization for 2 hotel plots has been initiated in Q4 fiscal 23. On the Medan Airport, on a Y-on-Y basis, traffic is up 76% to 1.7 million passengers in Q4 fiscal year 23. Domestic daily passengers has already reached about 112% of the April 2019 levels, while international passenger traffic was about 80% of April 23. Currently, 18 domestic and 6 international destinations are connected. On Nagpur Airport, the review petition was filed by Ministry of Civil Aviation in Supreme Court challenging the earlier Supreme Court order. However, the petition was dismissed by the Supreme Court in its order dated May 11, 23. We expect execution of the concession agreement at the earliest. In Bhogapuram Airport, foundation stone of the airport was laid by the State Chief Minister on May 3rd, 23. Tender processes is on for the selection of the EPC contractors. R&R processes are fully completed and land handover process is in final stages as joint survey of the land is underway. On the ESG front, GMR is fully aware of its role, that the business activity needs to be compatible with the permanent commitment to development and sustainability. In this direction, during the year, Delhi Airport became the first airport in the country to run entirely on hydro and solar power from June 22. For this operational usage, Delhi Airport is switching to electric vehicles from the current conventional vehicles in phase-wise manner. Hyderabad Airport has also received ACI Asia Pacific Green Airports Gold Recognition Award 6th time in a row in 15 to 35 million passenger category. Delhi and Hyderabad airports have maintained an ASQ score of 5 during the quarter. The presentation with all financial numbers are already available with you. If not, you can download it from the IR section of our website. We are available to respond to your questions on this call and offline after the call. Now I would like to open the forum for queries that will be answered by my colleagues from the corporate and business teams. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, good evening, sir, and thanks for the opportunity. My first question is on the financials. The other expenses has gone up by 3 billion QOQ. Of course, you mentioned that they are one-off and write-offs, but the write-offs are close to around 1.2 billion. 1.8 billion, while the other expenses have gone up by roughly around 3 billion. So can you please explain are there any other one-offs in this?
Yes, you got it. I want to take it.
Yes, sir. There are only 2 major expenses we have incurred. One is one of the upfront fee paid to bank facilities. Since we have completed the entire fundraising of the Hyderabad Airport and at a much cheaper rate, the upfront fee which we have paid to the bankers for the facilities is now charged to P&L account since we have reached the finality of the project, and also we are just completing the project and capitalizing the asset. That is one of the major items. The second one is basically, as you know, Hyderabad Airport has done the refinancing of the FY24 bonds at a much cheaper price for a longer tenor. So one of the, regarding the earlier bonds where we have done hedging, which has to be now cancelled, to the extent of that, the loss on the cancellation of the hedging has also been charged off to P&L account, even though there is no cash flow issue. These are the 2 major. And some of the expenditure we have incurred on the legal and professional charges in all the airports for the various cases which are happening, especially MAF and CGF issues, appeals before TDSAT and everywhere. Some of the legal expenses, professional expenses we have to incur, that has been provided for. These are the major reasons for increase in the cost. These are all only one time, and they will not be recurring in nature.
Sir, how much is amount cumulative amounts to? The total amount, one-off?
In case of the write-off of the bank charges will be around 6 crore rupees. And in case of the legal expenses will be around 50 to 70 crore rupees. And in case of the fees which we have paid in case of the GMR Airports Limited, we have raised the funds. Since you are aware that Cebu we have already divested, we got the funds and we have prepaid some of the loans, and the upfront fee which we have paid them which were supposed to amortize over a period of 3 years, now charged off to P&L account. This is a positive development since we have repaid the loans. That expenditure has been charged. That is about 30 to 40 crore rupees.
Understood. So my second question is one of the slides you are talking about the refinancing of the debt at GMR Airport. What is the debt at GMR Airport and what is the rate interest that we are paying right now? And what is the kind of savings possible in let's say in FY25?
So GMR Airports, we are talking about total debt will be around 3,300 crore rupees by March, since after repayment of the process which you have seen. And the current financial year will be doing the refinancing to the extent about 17 to 18 billion rupees.
Okay, I understood. So my last question is on the Bhogapuram. What is the timeline we are looking at for the airport, and what is the total project cost?
The total project cost, which is almost finalized in case of the Bhogapuram, will be around 47 billion INR, and which includes the amount to be refunded by the government of Andhra Pradesh, which is about 1.3 billion INR. And the timelines is the Chief Minister has already laid the foundation stone, and the joint survey of the land is going on. We are likely to take over the land. There are some more cases are pending in High Court, which are only for the compensation, which are likely to be settled in a matter of 1 month. So we may take over the land by end of June. And in the meantime, we have already issued the tender for EPC contract, international bidding. 4 bidders have come and who are now shortlisted. They are going through the entire site and asking for all the clarifications we are providing. So likely to start the construction maybe middle of July or 1st of August. Hopefully everything goes well.
It will take 2 to 3 years or 2 years, sir? Or...
It is from the date of the proceed to, it is 36 months, exactly 3 years. If you start on 1st August, by 31st July 2026, it will be completed.
Understood, sir. Thank you and all the best. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have a question from the line of Ankur Shroff from Swarnaratna Infrastructure Private Limited. Please go ahead.
Hi, sir. I wanted to know regarding the land to be provided to Bharti. I think 2 quarters back you had said that by March 2023 we should be able to provide the land. So any kind of clarity and update on that, please?
This is the second tranche of the Bharti deal that you are talking about.
Yes, sir. The 2.6 million.
Yeah, 2.17 million. The land in February month itself, we have issued a notice to Bharti to come and see the land parcels. The land parcels have already been now seen by them now, and it's almost concluded, and they will be taking over very, very shortly.
Okay. Thank you so much.
Thank you. A reminder to participants to press star and 1 to ask a question. We have a question from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Thank you for the opportunity and congratulations for a good set of results on the volumes and spending. And this is where some of my questions lie. I wanted to get a sense from your perspective on the non-aero spending at the Hyderabad airport. It seems that on a per pax basis, this number has improved quite meaningfully on a Q-on-Q basis, about 8-9%. And versus pre-COVID levels, it's probably up in the range of about 40% or so. The question essentially relates to whether this is being driven more and more by the incremental retail area that is being opened. And if so, does it have any positive takeaways for Delhi in the near future?
Yeah. So Aditya, this is Rajesh. I'll just take your question. So you're right. See, when you look at non-aero, there are 3-4 contributors for how do you improve your non-aero revenue? So one such contributor is the additional space. Second is how do you define the layout tax flow, because that increases your penetration. Third is the category selection. So at all our airports, these are some of the steps which we have taken. Hyderabad has already extended the footprint, and hence the larger area is available for duty-free, arrival duty-free store. And similarly, Delhi, we are expanding T1, so we'll have additional space over there. So I think this whole, whatever growth we are seeing, to a larger extent, this is sustainable, and this is what we will be, increasingly we should be seeing at our airports without making any forward-looking statement, but this is the way we are kind of looking at improving our non-aero commercial revenues.
Sure, thanks for the clarity. The second question was more linked to, in some ways, understanding where is the contribution to interest expense coming in beyond the mainstay businesses of Delhi and Hyderabad. Now, if I see your overall interest expense, it's more than about 2,000 crores in this year, whereas Delhi and Hyderabad cumulatively would be contributing probably half of that. It would make it easier for us to appreciate if you could tell us what are the other big components of interest expense. I'm assuming some part of it is the standalone operations, but it doesn't explain a whole lot of the 50% that remains unexplained.
No, there are three interest components in consolidated financials. One is the DIAL, other one is HIAL, third one is GMR Airports Limited. So GMR Airports Limited also, the interest will be around 5 billion.
Yeah, so let's say 5 billion of airports, another 8 billion of Delhi, another 3 billion of Hyderabad, and then let's say slightly more of Goa. There's still a meaningful 600-700 crores unexplained kind of number. Just trying to get a sense whether there's no clarity on which all other assets are contributing over here.
Yeah, so there is one more. Actually, when we consolidate the GMR Airport Infra Limited, there is one more entity, GMR Infra Developer Limited, which come into the picture. So there is a 1680 crore rupees loan. So there is additional interest cost is coming for that loan, and that loan has been repaid in the April 2023. Yeah, because from the FCCB proceeds.
Understood. I'll take this offline also just to get a better understanding. But coming back to numbers, and I think this question was asked on the EBITDA and how it has changed from 3Q to 4Q. See, the increase in other expenses is to the tune of about 3.5 billion rupees. And what we are kind of seeing as one-offs is a number that is less than 50% of the gap. So I'm just trying to kind of ascertain, should we be looking at full year numbers and adjusting for these one-offs, or looking at 4Q numbers which look quite weak and then analyzing numbers? Just trying to get a sense of how is the expense moving so much in a single quarter's time.
I think we have already explained some of the expenses, like the write-offs of the upfront the bank line of credits, and also the cancellation of the hedges which we have taken in case of the Hyderabad, where we have repaid the loans to the extent of $230 million. So all hedgings have been cancelled, which has also been charged off, which is more than nearly 1 billion INR. Plus, we have also have additional legal and professional charges where we have repaid the same proceeds. We have got the money and we repaid the loans, and amortization expenses have been charged to the account. And also additional legal expenses we have incurred, professional charges, towards the various cases we are arguing, especially in case of the MAF cases and the CGF cases in case of Hyderabad and some other cases in various forums. And there is some amount of expenditure is also from Goa, which is also. But most of these expenses, nearly to the extent of about 2.5 billion INR, is one of time, and it will not be repeated. That is what we wanted to communicate.
Sure. So you're saying 2.5 billion, including the Goa issues, or let's say the initial Goa losses, is where maybe Goa will continue, but other elements of 2.5 billion should not be recurring incrementally.
No, it's not like that. I mean, what I said is out of other expenses to the extent of 2.5 billion INR is one-off type expenses which will not be continued.
Okay. Additionally, I think when it comes to Goa, whilst Goa may be contributing negative EBITDA at this stage, primarily because of two reasons. One, these were the partial operations in the last quarter, and secondly, the current interim ad hoc tariff is significantly lower than what we would be expecting in the final tariff, which might take another quarter or so. So once we have the final tariff, you'll see Goa contributing positive to EBITDA.
That I completely understand, and thanks for the color. And one more question from my side. See, on the Delhi airport, it seems as if on a Q&Q basis you've been able to improve your volume numbers. Is this something specific to Delhi? Because I think seasonality should be against the aviation sector on a Q&Q basis. So is there something special happening in Delhi, or is it always the case that 4Q can be better than 3Q in spite of seasonality trends?
I think the traffic, the way the trend is, it is across India. It is not specific to Delhi. Just because the volumes are bigger in Delhi, otherwise the trend is same. If you look at it, actually Hyderabad has actually grown bigger than even Delhi percentage-wise. I think we have only 17.7 million we have achieved, and in case of Hyderabad, it is about 5.7 million. So the trend is same. I mean, it's not specific to Delhi.
Sure. Maybe last question from my side. We've seen quite a few routes being started from Hyderabad on the international side of things, and I think this has been our focus area. Could you give us some kind of forward-looking guidance of what kind of growth in international numbers in Hyderabad one can expect from here on, maybe for the next 2 years? I understand the bases are pretty low over here, so I'm just checking because you're competing with Bengaluru and trying to do more.
Yes, we have been trying to do better. For example, recently I think the operations have already started to London already there, and they are also starting to more international lines in case of Hyderabad. Our thrust is more on international traffic, but if you look at it, the trend, I mean, we are competing with the Bangalore. In case of the Bangalore and Hyderabad, even though overall traffic Hyderabad will be lower, but when it comes to international traffic, Bangalore and Hyderabad will be almost equal. So our trust is more, and most probably as of today, our traffic is about 15% of the total traffic of the Hyderabad is international, 15 to 17%. So we wanted to make it around 20-25% is our targets.
Got that. Any incremental debts that you would be taking at an asset level in Delhi or Hyderabad, or do you have enough cash to take care of it?
I think the entire financing is complete in case of Hyderabad and Delhi. Hyderabad has already raised the money and it has got sufficient cash balances. It is completing the entire construction and starting the full-fledged operation by September. Delhi, in the month of April, we have raised 1,200 crore rupees. With that, the entire CapEx program funding is completed. It is also expected to complete the entire construction by September, October, and start full-fledged by November. So no more fundraising is required in both airports as of today.
Oh, that's really heartening to know, and all the very best from an operational perspective from here on. Thank you. Those are my questions.
Thank you. A reminder to participants to press star and 1 to ask a question. We have a question from the line of Nirav Shah from GC Holdings. Please go ahead.
Hi. Good afternoon, sir. Thanks for the opportunity. So the first question is on the EBITDA contribution from the JVs and subsidiaries at DIAL. I'm seeing that for this quarter we have reported a EBITDA loss of 29 crores versus a run rate of around 60 to 80 crores. That is the general run rate. So any specific reasons for this?
JV's negative contribution. No,
for the year it's 335 crore contribution, and if I reduce the 9-month number, which is 364 crores, I get a 29 crore of negative.
Nirav, from where you're getting these numbers?
So I've taken the 4Q presentation details, the annual JV contribution, and I've taken the 9-month.
Because actually in the last quarter, there was a good follow-up.
Your numbers are not reconciling with our numbers at all.
Take it offline.
We can take it offline because we are not able to correlate from where you are taking the numbers.
Sure, not a worry. And just on the commissioning timelines for the Nagpur airport, we mentioned the Bhogapuram part, but the timelines for Nagpur, when do we expect to start the construction and the completion timelines?
The Nagpur airport, the review petitions, 4 review petitions have been dismissed till today, but there is one more petition, curative petition still pending, that we are expecting very shortly. After that,
And Nagpur is a brownfield airport, so it's not like, unlike Bhogapuram, which is...
It requires some capex, but it's not immediately.
Got it, sir. Thank you, sir. That's it from my side.
Thank you. We have a next question from the line of Ronak from Bank of America Securities. Please go ahead.
Yeah. Hi. Sorry if I'm just piggybacking over the
I'm
question.
sorry, Ronak, can you please use your handset mode? Your voice is cracking.
Okay, thank you, sir. Hello, can you hear me?
Yeah, we can hear you.
Yeah. I just wanted to again work through the math on the other expenses and the EBITDA, which was I guess we have discussed it multiple times, but just to go through it. On DIAL, I see a quarter-over-quarter movement of around 57 to 60 crores. On Hyderabad, I see a movement of around 80 odd crores. And on GAL, consolidated level, I'm looking at somewhere around 270 crores. Now, couple of things have been mentioned. One has been mentioned that, hello?
Yeah, please go ahead.
Yeah. So one thing that has been mentioned is the hedges on GHIAL, which has been 100 crores. And there have been write-offs of around 63 crores. So this totals to 163 crores of one-time expenses. So adjusting for the one-time expenses, would we say that GHIL performance for the quarter was actually around 80 crores better than the previous quarter? Would that be the right thing to say?
Yes. If we exclude the one-offs in case of Hyderabad, that is 63 plus around 30, about 95 crores. Yes, the performance should be considered. Excluding them, it's much better.
Right. So any reason again that ties back to the seasonality point which was mentioned earlier. Delhi Airport, Hyderabad Airport, both showing significantly strong numbers. For Hyderabad, especially, if you're saying that there's around 80 crores of improvement in the EBITDA, don't really see that on the top line either. We see around 30 crores of improvement on the top line. So exactly where is this improvement coming from?
So you're talking about Hyderabad performance or the EBITDA level improvement?
Right. So I'm just adjusting for the numbers which I mentioned, which was 100 crores on the hedges for GHIL and 63 crores of write-offs which happened at GHIL level. So if I adjust for that 163 crores on the sort of 557 crore EBITDA which was generated, this basically gives me an 80 crore upside over the 140 odd crore EBITDA which was generated in the December 22 quarter. I'm trying to understand, is there an 80 crore improvement in the EBITDA when the top line improvement has been just 30 crores, not even 30 crores, around 22 crores. So exactly where is this improvement coming from? I'm just unable to tie up the numbers. Am I missing something? Is the OPEX number something that needs to be adjusted even further? Are there more adjustments which are being missed on? I'm just trying to understand that.
We just wanted to understand, you are talking about consolidated financial or your asset side you are talking about?
No, that's the asset level. I'm talking about the GHIL asset level.
GHIL asset level, that EBITDA movement quarter on quarter you are talking about it?
Yes. So last quarter the EBITDA was 140 crores. This quarter this is around 57 crores. I'm not adjusting for multiple adjustments which are made. I'm just doing the basic sort of adjustments which are usually made, and I'm coming to this number. And so the difference between the two of them being 83 crores. And then I'm just removing the one-off factors which I mentioned earlier, being the hedges being cancelled and the write-offs being taken away. And that shows me an 80 crore improvement on an operational basis. So that's where I'm coming from.
So that is correct. I mean, whatever the one-off items we remove, the performance of Q4 will be much better. This is what we are trying to explain.
Maybe something to be taken offline. The next question and the last question which I wanted to mention was that again with these one-off expenses happening this time around. That's it for me.
Thank you.
Mr. Ronak, you're through with your questions?
Yeah, that's it. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have a question from the line of Sumit Krishna from RK Stock Holding. Please go ahead.
Sir, can we give any visibility of when we will be coming in profits? Or because it's already too long, consistently we are posting losses and losses. And whatever gains stock has made in last 6 to 7 months, in single day it has all gone. So do we have any visibility how we can come to profits? Thank you.
So DIAL now the expansion is getting completed by September. In the meantime, we are also filing our application for the tariff revision by July. And the new tariffs are expected to come from 1st April 2024 onwards. In the current financial year, we may still continue to post a little more losses. But in 24 onwards, we are expected to come into green, based on the revised tariff and an increase in the traffic and also increase in the CCD revenues. We are hoping that 24-25 will be in profits.
So do we have any plans to raise equity to reduce the debt? Because operationally, I don't know how we will come to the profits. Because the debt component is so much. Individually, we may handle DIAL, Hyderabad, but on a corporate level, do we have any plan to substantially reduce our debt?
So this project finance, as far as the project finance is concerned, assets are self-sufficient. They are able to comfortably service the debt. There is no challenge as far as the assets are concerned. At consolidated level, the debt coming down immediately not possible because now we have just completed the expansions. Over a period of 3 to 4 years, then DIAL will start reducing because this will be more or less the final expansion. After that, whatever the cash generated will start reducing the debts. So it will happen over a period of 3 years onwards down the line, and we'll start reducing the debts.
Okay, thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. As there are no further questions, I would now like to hand the floor over to the management for closing comments. Over to you.
Yeah, thank you so much, everybody, for joining this call. We are available offline to answer your queries with respect to these one-offs and some of the margin improvements that we are seeing now, especially at Hyderabad, which I think going forward as we expand our retail footprint area and duty-free area in Delhi, you will see as we move forward. So primarily, I think the theme is that traffic has come back with vengeance. It's growing very well. It is highly correlated with India's GDP and spending power of consumers. And as we start to offer more and more flights, of course, at the air, but also ability for consumers to spend at the airport, the metrics are only going to improve. The specific question on debt reduction, I think being a capital-intensive industry, we have to wait for the new tariffs to come into place for the capex already happened. I think there's always a lag, but the trend line is very sufficient that we, in 3 to 5 years' time, we should be free cash positive to not only to reduce debt but also to service our shareholders from dividend payouts as and when those happen. So I think Hyderabad is already demonstrating that fact. Hyderabad is profitable this year, and hopefully, I think very shortly, Delhi should also start to demonstrate the same metric. Thank you so much. We are available offline. You can contact us by mobile or by email. Thank you.
Thank you, sir. On behalf of GMR Airports Infrastructure Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.